Kevin, the Liberal government has said that Budget 2022 is all about fiscal responsibility. It's a prudent budget. How would you characterize it?
I wouldn't characterize it as prudent by Liberal government standards for sure. I mean, they did, Larysa, what they have said all along that they would do, at least when it comes to fiscal planning, fiscal prudence. They said they'll get the budget essentially on a track to effectively eliminate the deficit. They did that 5 years out. The deficit is essentially gone. And they said they'll keep the debt to GDP ratio on a downward track. Now, people don't love that metric as a fiscal anchor, as something to sort of root the foundation of the budget on, and that's because it doesn't actually, in some instances, ask that much of the government. I mean, as long as the economy is growing, the debt to GDP ratio should continue on a downward track. So it doesn't necessarily require a lot of hard work at the finance department to keep that happening. Nonetheless, the government did follow through on that promise to keep that debt to GDP ratio on that downward slope. It should be closer to 40% of GDP by the end of the 5-year period, compared to something around 45-46% now. And on in terms of international standards, that's okay. And when you look at these issues, like in some ways, that's really what matters. It comes down to making sure Canada still looks good to the creditors out there. And those numbers are certainly enough to keep Canada at the top of that pack. So when international investors are looking around for bonds to buy, they're still going to like the look of Canadian debt.
You've touched on some of those assumptions that are going to get us to that $8 billion mark in the year 2026, I should say, 2027. What could derail those projections? The Liberal government, of course, has suggested there's a lot of uncertainty, global uncertainty still.
Definitely, Larysa, and you just you zoned right in on what could derail those projections. And the government, in fact, did a scenario analysis, heading into the budget and presented to us in the budget document about how the projection that you and I just discussed could go terribly wrong if things around I guess the issues surrounding the war in Ukraine, if things got worse, markedly worse than people think they might at this stage, then that could set us up for even more rapid inflation, perhaps a global recession, or certainly a global slowdown, lots of instability. Markets wouldn't react kindly to that sort of thing, of course. So that could really throw things off. I think that's the biggest risk right now. And to her credit, Finance Minister Chrystia Freeland did acknowledge that, did put that forward as a reason to go easy heading into the next couple of years.
Of course, defense, a big part of that new spending, which is, I guess, around that $60 billion mark. Let's just get into some of those, the new measures, everything from climate change to housing. What really stood out for you?
The housing issues, the housing measures were certainly big ones. That was probably what I would say. Certainly, our audience here at the Financial Post, but a lot of people out there generally are really worried about what's going on with housing. We needed to see something that might move the needle on supply. That seems to be the biggest issue. We just have too many people wanting to buy houses that just aren't there. The federal government put a lot of money on the table to do something about that, and pledging to build tens of thousands of houses over the next number of years. Look, the federal government has done it before in the past. I mean, that's what CMHC was created to do after the Second World War, was to stand up houses in a hurry. The interesting thing that the federal government is doing now seems to be essentially bypassing the provincial governments, bypassing an extra layer of bureaucracy, and getting that money straight to the municipalities where so many of these supply decisions are made. So that could help a bit on the margins for sure. There is a mismatch there, though, Larysa, because another important economic driver, and this is again to the government's credit, it's recognized that we just don't have enough people to keep the economy going at a pace that to which we've become accustomed. So they've opened the gates to immigration. They're bringing in a lot of high-skilled immigrants. That's excellent on one level. But on the other side, I mean, these people are coming into our cities. They're signing up for good jobs. They have lots of money to spend, and they're bidding up they're bidding up the housing prices, going after that reduced supply of housing stock that we're talking about. So I just point that out there. It's like sort of a bit of a contrast between the two approaches. While on one hand, we are worried a lot about the housing affordability, but at the same time, we're bringing in, or a big part of the economic growth strategy is to boost immigration. And I don't know that we've quite come up with a plan that balances those two things off. But so that would be going forward is something that the policymakers in Ottawa should probably be looking at.
Help us understand and I guess reconcile two other aspects, that road to net zero and the oil and gas sector, the commodities that have really driven Canada's economy. How do you reconcile the two?
Yeah, that's a tough one for Canada too, given the imperative of climate change, given all the commitments that Canada has made around all the UN efforts to do something about climate change. I think on the whole, though, that the business community, certainly the oil and gas industry, probably happy with this budget. I mean, they're not particularly happy about the carbon tax and all the things that governments are putting in place to try to reverse the carbon emissions. But what they were looking for, though, is some significant help from the federal government ahead of this budget to stimulate investment in carbon capture technology. So rather than trying to squeeze production in the oil sands, if we can come up with some technology that would actually pull some of that carbon out of the air, that might keep the industry going for longer than perhaps some people would expect, given that imperative of climate change. So, the government came through there, some really significant tax credits for investment in carbon capture technology. That could help. I mean, that technology does look promising. Lots of people think it could work. But it's not quite there yet. So to get it there is going to require lots of research, development, and investing in that tech at the early stage. And so the government has given industry a good incentive to give that a try.
Curious to get your thoughts on the Canada Recovery Dividend. We heard for some time that government was going after banks and life insurance companies to tax the profits that they had made, I guess specifically in 2021 during the pandemic. What is this going to do to these companies? Does this now, I guess, push them outside of Canada?
Yeah, I mean, so it's probably not going to push them outside of Canada, Larysa. I mean, the Canadian banks are pretty rooted here, so they're not going to run away necessarily. Now, it might push some investment that they might have intended to do here in Canada out into other countries, but they were kind of doing that anyway. The Canadian market pretty much saturated for the legacy banks. So I don't think that's going to hurt them too much. Their counter argument, or their argument against the tax it's twofold, I guess. One, they point out that by taxing the banks, and given the extent to which we're all invested in the banks through our RSPs or what have you, that we're ultimately, or that tax ultimately is a tax on savers. And then the other thing that the banks dislike about it is they just think it's unfair. And the second argument does carry a bit of water with me. I mean, in a perfect world, you'd have a neutral tax code that didn't treat various industries different than others. So that argument does make a bit of sense. And I suppose on the margin, there's some there's a chance that the banks end up not being as an attractive place for investment going forward. On the other hand, though, I think it's more of a symbolic gesture at the end of the day. I mean, we've been living through this period of extreme inequality, economic income inequality. Most people you talk to, most people who have thought deeply about this, see a connection between that income inequality and the political polarization that we're seeing going on. That polarization is making it more and more difficult to get things done at the political level, to move forward the sort of policy we need to tackle climate change, to accelerate our entry into the digital economy. Take your pick. So many things to do out there. But our political class can't really get its head around doing any of them. And that's in part because all the various elements of those parties are just so angry at each other. They just, and polarized, they just refuse to cooperate with people they see as on the other side of the argument. So if we're going to try to pull these various groups back together, we're going to need to show some of the angrier people out there that that we are taking steps to bring some fairness to these disparities. And unfortunately for the banks, they make an easy target, but they make an easy target because they've done extremely, extremely well through this period. And so, this is the kind of thing happening all around the world, Larysa. In Europe, there are various governments going after their commodity sectors because they have benefited from the surge in commodity prices through the pandemic. In Canada, it's the banks that sort of stand out. So that's where the politicians have trained their fire.
Lastly, did the budget make it easier or harder for the Bank of Canada to do its job?
I'll say it did neither. The fact that the government did pull back the emergency measures, that was something that needed to happen. That on the margin should make life a bit easier for the Bank of Canada, in that it won't have so much stimulus in the system, in an economy that doesn't obviously need it any longer. At the same time, though, the federal government probably could have done a little more to help the Bank of Canada out there. I think, like the last time we talked, Larysa, we mentioned how there were things that the federal government could have done to give households a reason to keep all the savings they built up during the pandemic sort of in the bank, and that would keep that money out of the economy. Wasn't a lot of that kind of thing in the budget. So let's just say they're neutral when it comes to inflation.